Hello students, this is the second video on fund flow statement. Already I made first video on fund flow statement. In that video I have explained the concept, definitions, and as well as I have shown the format of how to prepare statement showing changes in working capital. Besides, I have explained how to solve the problems of statement showing changes in working capital. This concept is very important in preparation of funds flow statement. So I will provide that link of that video in the I button as well as in the description box. Please do watch that video before watching this video to better understand. And in this video I will cover the calculation of funds from operation as well as how to prepare provision for taxation account to calculate the missing figures, right? So let's start this video. So calculation of funds from operation, please bear in mind the most significant is the student will get confused. Net profit and funds from operation both are same. Please bear in mind these two are different items. Net profit will be calculated after considering non-cash, non-operating items, non-operating expenses besides non-operating incomes even. Clear? So what do you mean by non-cash item, non-cash expenses? Any expenditure which will not leads to any outflow of funds. Clear? That is called as non-cash expense. Whereas non-operating expenses refers to any expenditure which is not part of our operational activities of the business. Besides, we earn certain non-operating incomes even. Examples of non-cash expenses are depreciation, goodwill written off, patent rights written off, preliminary expenses written off. Whereas examples of non-cash non-operating incomes, that is dividend received, interest received. So net profit will be calculated after considering all these items, non-cash, non-operating. Whereas funds from operation will be calculated without taking these into consideration, because non-cash item will not lead to any outflow of fund, therefore we don't consider. Whereas non-operating items, since these items are non-operating, we don't incur these expenses or earn this income from the operational activity, therefore even we don't consider. So funds from operation is a very precise calculation without considering the non-cash and non-operating items. How to calculate that funds from operation, I will explain you. So this is the P&L adjusted P&L account. P&L adjustment account or adjusted P&L account prepared to calculate the funds from operation, right? So as you are already aware, the preparation of funds flow statement require the comparative balance sheet, that is last year balance sheet data as well as current year data. Then only we can prepare funds flow statement. So therefore, the P&L adjustment account is prepared to calculate the funds from operation or funds lost in operation. How to calculate that? The P&L account being a liability shows credit balance. That's the reason why opening balance will be written as by balance brought down, whereas closing balance will be written as to balance carried down. Then we debit all the non-cash and non-operating expenses which have already been debited to P&L account, so that we can calculate the funds from operation. The items are, on the debit side you will find depreciation, preliminary expenses written off, discount on issue of debentures, goodwill, intangible assets written off, transfer to reserve, this is appropriation of profit, transfer to capital reserve, proposed dividend, interim dividend paid or final dividend paid, provision for taxation, income tax paid, loss on sale of asset. These are non-operating, non-cash expenses already been debited to P&L account. Again we are debiting to calculate the funds from operation. Clear? At the same time, on the credit side you will find profit on sale of asset, then appreciation in the value of fixed asset, excess provision withdrawn, dividend received, interest received, so on. So we consider non-operating incomes on the credit side. Again we will credit to calculate funds from operation. Clear? Suppose once you close this ledger account, if you get the balancing figure on the credit side, that is funds from operation. If you get the balancing figure on the debit side, that is funds lost in operations. Like this we can calculate either funds from operation or funds lost in operations. So we will take up the problems, then you will understand better. See, this is the first question. I am taking the questions from the very reputed book R.P. Trivedi. So these questions I am solving here to make you understand better. So if you see the question, following extract from the balance sheet of Gautam Limited as on 31st December 2016 and 31st December 2017, you are required to calculate funds from operation. So 16 and 17 data we have given. Profit and loss account, opening balance is 30 and closing 17 balance is 40. General reserve, earlier we had 20, now it is 25. Goodwill 10,000 and 5,000. Preliminary expenses we had 6,000 and now 4,000. Provision for depreciation on machinery 10,000 and 12,000. So this data is given. We are asked to calculate only how to calculate. We are asked to calculate funds from operation. So for this we will prepare one ledger account. This ledger account is called as adjusted profit and loss account, particulars rupees, particulars rupees. So this profit and loss account starts with opening balance of profit by balance brought down. Opening balance is 30,000. Opening balance, why I am considering, that is 16th value, 2016 is opening, 2017 is closing. Therefore I am writing by balance brought down, that is 2016 balance, that is 30,000 opening balance. Whereas to balance carried down 40,000, that is closing balance, that is 2017 balance. Once we write down these balances, then we will further proceed with general reserve. We had last year 20,000, now it is 25,000. There is a 5,000 increase has taken place. When general reserve will increase? When we transfer funds from profit and loss appropriation account to general reserve. So what is happening here? There is no outflow of funds, just appropriation, in the sense from one account to another account we are keeping. So therefore we will write to transfer to general reserve 5,000. Again we will debit to calculate the funds from operation. Next item, goodwill. Earlier we had 10,000, now it is 5,000. There is a decrease in goodwill 5,000. When goodwill will decrease? When we debit to P&L account as goodwill written off, right? So we will write again to goodwill written off 5,000. Then next item is preliminary expenses. Again same, preliminary expenses is a fictitious asset, it is written off. Whereas goodwill is an intangible asset, it is written off. If goodwill increases, then it is considered as a purchase of goodwill application. Clear? But preliminary expenses is how much? Decreasing by 2,000. So preliminary expenses written off 2,000 we will take. Depreciation we had 10,000, now it is 12,000. Depreciation is increasing by 2,000. In the sense we are charging depreciation in the current year is 2,000. Like this we will write all the items. Then we will close the account. Whichever side is more, we will write both the side. Since we have debit side more 54,000, we will write both the sides 54,000. Balancing figure we are getting 24,000 on the credit side. This figure is called as by funds from operation as balancing figure. Clear? So very simple. In this way you have to prepare the adjusted P&L account to calculate funds from operation. We'll take up one more question to make you understand better. So in this question, see, if you see this question, it is different from earlier question. In the earlier question, you have provided the comparative data where 16 and 17 both the years data is provided. But in this question, we have provided only one P&L account, right? So we have provided on the debit side expenses paid and outstanding, depreciation, loss on sale of machinery, discount on issue of debenture, goodwill written off, then net profit. Credit side gross profit, gain on sale of land. So how to calculate in this case the funds from operation? The same way we have to prepare the P&L adjustment account or adjusted P&L account. Then the balance brought down, since we have provided only 1 year data, therefore balance brought down will be considered as nil, zero. We don't have any last year profit. This is the current year profit and loss account. Therefore to balance carried down is how much? 1,15,800 the net profit. So very clearly how we got this 1,15,800 after deducting some of the non-cash non-operating items. Therefore we will add back again those items to get the accurate profit, which is called as funds from operation. So expenses paid and outstanding we don't consider because this is an expenditure for the business already paid. It is an outflow of funds. Whereas depreciation is a non-cash expenditure. Again we will debit depreciation 70,000. Then loss on sale of machinery, this is also a non-cash expenditure as well as non-operating. Discount on issue of debentures, it is a non-cash expenditure. Goodwill written off, non-cash expenditure. Again we have debited all the non-cash and non-operating items. Whereas if you see on the credit side, gain on sale of land, This is also a non-operating income. So gain on sale of land, I have written 60,000. Please don't get confused. Gross profit is the current year gross profit. If you consider gross profit opening, net profit closing, your answer will be wrong. So net profit should be considered current years as a balance carried on. Then close this account. You will get the balancing figure on the credit side, that is called as by funds from operation as balancing figure. So like this, we have to prepare adjusted P&L account and calculate the funds from operations. Right? I hope I made you clear the content of the fund flow statement. Anyway, upcoming videos I will take up the long question wherein I will explain further about this concept. So take up one more question. This question is regarding the provision for taxation account. See, two important items, that is provision for taxation and proposed dividend, will be given in the question. If there is an adjustment, we don't consider these items as what current liability, then we will prepare the ledger accounts. So if provision for taxation account, if we are preparing provision for taxation as well as proposed dividend with an intention to find out the missing figures. Clear? So if you see this question, balance in provision for taxation, opening balance is 30,000 and closing balance is 40,000. Then tax paid during the year is 25,000. So when tax paid is given, what is our duty to calculate? How much provision we made during the year. That we need to calculate as a missing figure. So how to calculate? Just simply you prepare a provision for taxation account. In that provision for taxation account, what we will write? Opening balance and closing balance. Since the provision for taxation account is a liability, it shows which balance? Credit balance. So by balance brought down, that is opening balance is 30,000, to balance carried down is 40,000. Why do we create this provision? Provision for taxation is created to make the tax liability, make the payment of tax liability. So how much tax we paid during the year? We paid 25,000 tax paid. So what is the entry when we pay tax? The entry is provision for taxation account data to bank. So in the provision for taxation account, we write to bank. How much? 25,000. Clear? Then we will close this account. We will get balancing figure 35,000 on the credit side. What does it mean? This is our missing figure which we are calculating. This is called as by P&L account, that is tax provision made during the year. Clear? So what to do with this? This tax provision made during the year will be written in P&L adjustment account debit side to provision for taxation. Whereas tax paid will be written as an application in the sources and application fund flow statement that we will learn in the third video. Clear? I hope I have made you understand all the basic crux of the how to calculate funds from operation or funds lost in operation, whereas how to prepare provision for taxation account even. Clear? So I wish you all the best. Thanks for watching the video. Please do subscribe my channel, Mentor the Trusted Guide, and motivate me to make more qualitative, informative videos. Thank you very much.